What's good, YouTube? Welcome back to day 3 of the boot camp series. In today's video, we're going to be talking about fair value gaps. This is a huge part of the model, so get your journal ready, get your notebook out. You're going to want to definitely take some notes on this because you want to be able to identify these like super easily. It's going to help out a lot in your trading. So first, before we get into the chart examples, I want to show you what this looks like by drawing it out. So let's do that right now. So all of fair value gap is, it's a time when price spiked up or down, right? So we could either have bullish fair value gaps or bearish fair value gaps, right? So all of a bullish fair value gap would mean price ripped up very fast and we left what's called, right, a bullish fair value gap in the market, and this can tell us a lot about what's going to happen in the future, right? They're good targets, as you'll learn in day 4, talking about liquidity, right? But let's get into what these actually look like. So how to identify fair value gaps. At first, it's going to be a little bit difficult, right? I remember I had some trouble with this, but it's not the hardest thing to understand. You just need to watch the chart and get a good eye for them, but it's pretty self-explanatory. So here's a candle body, right? Let me get this drawing tool figured out. Which one did I use? Not that. There it is. Okay. So, here's a candle, right? And then hold on. Right, so we have a candle right here. And then we're gonna do, you know what, chalk that. I'm showing you on the chart. I think it's gonna be easier for you guys to understand, right? So all of your value gap is, it's when price rapidly rips up, leaving a gap in the market. Why is this useful? We can use these to help us determine our bias, right? A lot of times, if we're showing a lot of bullish momentum, right, and leaving a bunch of fair value gaps, respecting fair value gaps, right, we'll get into that, but first let's identify them. So right here is a fair value gap. Right here, I'm actually going to draw it out with the rectangle. So it's when we leave a gap in the market. So let's zoom in here, right? So do you see this candle body right here? This blue candle body, right? So fair value gaps happen on a series of 3 candles, right? So this candle, bullish candle, whatever, bearish candle, and where the fair value gap would be is it's this 3 candle series, right? This candle, this candle, this candle, and the fair value gap would lie from the bottom of the wick of the 3rd candle and then to this wick right here. So I'm going to draw it out from there to here. And how I'm getting that box is from this wick to this wick, and we left a gap in the market there, right? So that's a bullish fair value gap. It's kind of hard to see. That's better. Bullish fair value gap. All right. I'm going to show you another bullish example, and then we'll get to bearish examples. So look at here, right? I'm just going to keep going through a bunch of examples because I think you'll be able to gain an eye for them. So look here, look at these three candles. 1, 2, 3. No gap was left, right? But what if we look at these three candles? Bullish candle, bullish candle, bullish candle. And the fair value gap would lie right here. From, if we zoom in more, from this wick to this wick, and price ripped up and left this bullish fair value gap, right? What do we see here? Another bullish fair value gap, right? So from this wick of this candle to the bottom or the top of this wick, we left a bullish fair value gap. Okay, I'm gonna keep going through these so you gain an eye for them, right? So you could see in here how we're chopping around. We're in this range from, you should know what that means from the previous video, and there's no gaps in here, right? No gaps, but once we start displacing and moving downtrending a little bit, right? What do we see? Bearish fair value gaps now, right? Here's an obvious one. I'm going to zoom in. You see this huge gap right here from this wick. It's this candle, this candle, this candle, and we're leaving a gap right here in the market from, and how did I draw that out? I'm going to do it again. It's this wick to this wick, and what's left there? It's that gap, right? Okay, that is a bearish fair value gap. Okay, this is a bearish fair value gap, and look, I'm able to spot them out like nothing, and you will also be able to do that. It just takes a little bit of practice watching the market, and you'll be able to spot them super easily. So look, this wick to this little tiny wick right there. If I zoom in like crazy, it's from this wick to this candle wick, and we left that gap. And what did price want to do? Tap into this gap before moving lower, right? And look, this is the 15-minute time frame, but we leave gaps on every time frame. I'm going to drop down to the 5-minute, right? Look, we're probably going to leave more gaps on the 5-minute. And same thing with the 1-minute. Okay, super obvious one. This one should stand out to you, right? This gap right here should stand out to you. What is this called? A bearish fair value gap, right? This one's bearish fair value gap. Huge dump, price displaced fast. We left the gap in the market. That's a bearish fair value gap. So this will make more sense when it comes to the entry model, because this is a huge part of the entry model, right? I look for a tap into, price to tap into either a bullish or bearish fair value gap. So that'll make more sense down the road, but let's just keep looking at these chart examples, right? So like, as you see, I keep pointing out, it's like this 3 candle, let's do a wick right there. It's like a 3 candle series, right? So like this, I keep pointing this out. This is the gap, right? This right here is the fair value gap. And you probably have been able to notice that as I'm going through the chart examples. So the green box would be the fair value gap, right? The green box right there. I'm going to go to the hourly time frame. keep getting your eyes adjusted to this. So these should stand out very obviously to you. You should see this bullish fair value gap right here, and there's actually two of them. All right, so from this wick to this wick, we'll draw that one out. From this wick to this wick, we'll draw that one out. So there's two bullish fair value gaps right here. And look, price wants to tap into this before delivering higher. Before price wants to move down into these gaps, tap these gaps before flipping back up and delivering higher. Same thing with the bearish gap, right? This should be obvious. You should be able to see how this 3 candle series, 1, 2, 3 candles, we leave a huge bearish gap right here. I'm gonna make this one red. That's bearish. This wick to this wick, we leave a bearish gap. Okay. Now let's look at, sometimes we don't always leave a gap, right? So like if we look at this candle, and this candle, this wouldn't be like, there's no gap in here, right? Because due to this wick, right? There can't be a wick in between it. This isn't a gap. 1, 2, 3, no gap. 1, 2, 3. Yeah, there's a gap right there, right? That's a smaller one. It's a smaller bullish fair value gap. Okay. There we go. This candle, this candle, this candle, no gap. This candle, this candle, this candle, no gap. This candle, this candle, this candle. Yeah, there's a gap, right? That's a bearish fair value gap because it's black candles, downward moving candles. So what I would want you guys to do to really get this in your head is find 10 examples, mark them out, do 10 bearish fair value gaps, do 10 bullish fair value gaps, journal them, send pictures in the comments so I can confirm if you're getting it right, you know. And that's about it for day 3. This will make a lot more sense down the road because this is a huge part of the model, right? Price likes to tap into these fair value gaps. We could see, I'll make a fair value gap part 2 video explaining what to look for with these gaps now, right? Like what this could tell us about price, how we react within these gaps, how we sometimes tap the gap and then flip strongly out of it. Sometimes we disrespect the gap, but that'll have to be for another video. That'll be fair value gaps part 2. For this video, I just want you guys to understand how to identify them and mark them out on your chart. So that's it for day 3. I'll see you guys in the next video. Peace.